So moving ahead, something that happened, a major event. The president of Kenya, President Uhuru Kenyatta, signed into law the CBK Amendment Bill 2021. Now, this bill would see that the digital lenders in Kenya, who are, I think, more than 300 of them, will now...
Registered. That's registered.
They haven't been registered because it's a market that is not regulated. So it's now getting into regulation. So the digital lenders, so for those who are registered, they're only registered under the Digital Lenders Association.
Yeah. So the 300 are under DLAC or...
No, some are under DLAC, some are not. Okay. Now this move will see the digital lenders being regulated by the CBK, just like the banks. Now this is going to be an interesting move because CBK is gonna be checking a number of things with the digital lenders. So the CBK will have the right, just like the banks, to revoke the lending license and certificate for that, and as
to issue and revoke.
So they have been given 6 months to comply. So in the next 6 months, if you don't have that CBK lending license, my friend, you're out of business. So one of the things that they'll be looking at the cost of lending that these people are lending with. Because I remember, as we said in episode 16, that if 16 or 15, that if you look at the banks, you'd easily find an average of the lending rates because they are around a certain neighborhood. Around 12 point something percent. But then when you come to the digital lenders, some are lending at, if you do the annual percentages, it's coming to probably around even 100 and plus percentage, the annual rate. So it's a wild curve. So I'm looking at CBK. Probably they'd want to have it in a certain neighborhood.
What would you have to do that to, by the way? To the difference in the lending rates between the banks and these other...
I've actually never thought about it. What do you attribute it to? I've never thought about it. I'm thinking about it for the first time. Why is it that they're lending in...
Very variably.
Probably it's because...
I think it's because of the
risk.
And regulation. Lack of regulation. Yeah. So there's no regulation. So if I market my product in such a way that you're going to take my loan, you're going to take money from me.
Yeah.
I have the dispensation to charge whichever interest rate I feel like. Because look at it from this way. We talked about China lending to Kenya, and then they want to do what they want to take the state assets. Same to what is happening in Uganda. We have different people who can finance these countries, Kenya and Uganda, with the money they want. But China is being too sweet. They're like, you just sign that.
Let's come back to digital lenders.
I'll give you that money, right?
Let's come back.
Okay, I'm bringing you back. So you come back here. These guys are like, all you have to do, key in these details, we'll give you the money you want in seconds. So I'm taking higher risk, and the rule of investment has higher risk, high return.
High returns.
So as a digital lender, I'm giving you the money very quick, very fast.
Yeah.
That's high risk. Yeah.
Okay.
What's the high return? The high return is me charging you outrageous interest rates. Makes sense?
Yeah.
The one who will take lower risk by taking longer to give you the money while they're doing the KYCs and all that. They can only charge kidogo interest.
And one of the things that has always stood out for me on the variation in terms of the cost of the lending rate between banks and digital lenders is because of when you look at a bank, in banks there are opportunities of collateral. Okay. So for you to finance a certain thing, you might give your title deed for your land, the logbook of your car. So that acts as collateral. Okay. And then there is also another thing, you could issue your payslip. Okay. So so that payslip would be a guarantee that you'd pay because there's income coming in at the end of every month. But then when it comes to digital lenders, for them, you've just known them 5 minutes ago. You haven't given them your title deed or anything. So that's why that premium is there because of lack of collateral.
That explains why on average banks charge lower interest rates as compared to this. But it doesn't show why banks have quite similar
you can find an easy average compared to makes a lot of sense.
No, the spread now.
Yeah.
The spread is the word. The spread in between banks, interest rates in banks is very small as compared to now the digital
to the digital lenders.
Yeah, I think it's because of the risk and you said risk. So
I'm gonna look into that. But now it's gonna be an interesting time to watch that space and see, if now
should
that
they now contract,
if it will
the
contract.
spread reduces.
Absolutely. Something that stood out for me is CBK will also be checking, the capital stock that the digital lenders have. And this is something that during the finance committee, when this bill was in the finance committee in the National Assembly, the committee, came out and said that since digital lenders are not deposit taking, why should you check their capital stock?
Yeah.
Okay.
Yeah.
But then now it's been signed into law.
I don't think so.
What do you think? Do you think
so.
they should check that?
No, they have no business checking it.
Simply because they're not deposit takers?
Yeah. These are people who give money. They don't take any money.
Yeah.
So I don't care if you mismanage your business and so you don't have money to give people. See, that's how your business model is only as good as how much money you have to give out, and the ratios of your non-performing loans.
Look at it.
That's up to you to manage.
Look at it this way. If now they'll be having that tagline on their websites that we are regulated by the Central Bank of Kenya.
Yeah.
And if you are really regulated by the Central Bank of Kenya, you should be a solid business that if I come to you, you have the money to give me. I know it's a pedestrian narrative, but that's how I can justify it.
It's good it came from you. It's good it came from you. But
I'm not from Joroge.
Before we continue, I don't think it was signed. These guys went to the committee. The different people are invited to go make presentations.
Absolutely, during the
committee, right?
Public consultation forums.
Yeah, and that came up. And I don't know who exactly it was. It's Safaricom or some other firm.
Yeah,
owned by, or the CEO is Aristaches someone. I forget.
Okay,
but I think it was someone proposed against that. That because these people. What the CBK was it the CBK or the bill? The bill was proposing prudential kind of regulation. So that is to mean that just like banks, you have to look at the financial prudence of your books.
Absolutely.
On your business.
Yeah.
How much are you giving? How much do you have in stock, capital stock?
Yeah.
And all those things. Then someone comes and says that doesn't make sense. What I agree with, I think you agree with that as well. That it doesn't make... Okay, you asked me that question. Do you agree with it?
To some extent.
I agree with it totally. That you have no business as the CBK to check my capital stock. As a digital lender. I am lending people. I'm not being the one being lent. No one is giving me their money.
Now the problem is
managing
if you don't make that capital stock of CBK in the next 6 months, you're out of business. So digital lenders...
That's what I'm not agreeing. I don't think it was signed.
Now,
I think it was... Someone proposed this, and the committee adopted it.
Okay.
They accepted that change and they're going to make it.
Now let me look at it from an investment, an international investment point of view.
Yes,
okay?
Please.
One of the reasons why I had really been, campaigning to see that the digital lenders are regulated by the CBK is for two reasons. Number one, so that we put a stop to the predatory lending that is there in this country. Number two.
Do you use digital lending?
I have before used digital lending. Yeah, and they're quite exorbitant. But
so it touches home?
It does.
Okay.
Number two is the kind of methods that the digital lenders have been implying, to get their loans back. Yeah. For example, debt shaming, this kind of really, that the extreme measures that they are putting into play to try and recover their money.
Do you mind telling our listeners and viewers why it's wrong to be debt shamed? You took a loan. We are adults here. You agree that I'm giving you this money, this much money. You're supposed to pay it by this time. Then it gets to that time. Now you don't.
You're an advocate of debt shaming, so I'm not having this conversation.
I'm not advocating.
Let me skip
That's why I said, would you tell our listeners and viewers? Because now,
I mean, it's unethical. It's really unethical.
Yeah.
For example, this is a famous this is a famous story that goes on.
Yeah.
We've seen that when you borrow from some digital lenders and in your phone, when you've downloaded the app,
Yeah.
they tell you that give access to this app, give it access to your contacts.
Yeah.
Okay.
Yeah.
So give access to this app to make calls and send SMSs.
Yeah.
So you allow. So what happens is that in the event that you default, what happens is that this digital lender is has your access to your contacts.
Yeah. Which
you've given access to make calls and SMSs.
You are the one who give,
so they look at the people you've saved and they see that Easter has saved Pastor something honorable something, and they call that person and they tell Pastor, do you know tell this guy to pay, so that that's how debt shaming works, which is totally unethical. Now, coming back to the third point of why I've been anchoring for digital lenders to be regulated by the CBK is when it comes to investment. Now, I think we'll be seeing a lot of investment, a lot of FDIs coming into the digital lending space. This is particularly because when you sit, I'm looking at it from a global perspective, okay?
Yeah.
Now, you're sitting in London, you're sitting in New York, you're sitting in Berlin, and you are, let's say, BlackRock, big money guys, and you're looking to invest into a digital lender. And then you see that the digital lending space in that country is unregulated. You're going to have qualms about investing in that space, okay? Now, yes, it's true that regulation follows innovation, and this is a classical space, okay? So the digital lending space was innovated and then regulation followed. So regulation brings confidence in investors. And now, particularly addressing the issue of capital stock. If I'm to invest in a business that is in a digital lender, for this case in Kenya, now, if I understand that it's a regulated space, so I even have confidence that yes, these people have footed a capital stock of this amount. So I mean, I have confidence that they are solid.
What do you mean?
So if you look at the capital stock requirement, okay, so
for the banks, that is
no, for these digital lenders. So if I am to invest, I'm like, I have confidence. So if they've even footed a capital stock of this, if they're sustaining a capital stock of this amount, then I'm like, okay, then it gives me confidence in investing.
I'm not getting you. Let me tell you. Let me show you where I am, so you find out how you can get me to your point of understanding. Well, if I'm looking for a bank to put in money, I'm going to look at the cash reserves, the deposits they have with the CBK. That is the is it what's it's called? Reserves. You're required to have as a bank to have reserves with the CBK, right?
Yeah.
And that acts like an insurance kind of. If you default in payment of if you don't manage your liquidity and so you don't have money to give your
during
people
the
want
process
to
of
withdraw,
liquidation, that could be.
It is used to bridge that gap.
Yeah.
That is me as a depositor. I want to know that if I give you this money, I can get it at any time. And if you don't have it, the CBK will use the money you've given them to pay me.
Yeah.
To give it to me, not to pay me, to give it to me.
Yeah.
Because it's my money. Now, this is now BlackRock for this, in this case of digital lenders.
Yeah.
BlackRock wants to get into digital lending in Kenya.
Yeah.
They want to invest in Tala. Okay. Actually, Tala has.
But then capital stock is different from the deposits that the minimum deposits that these guys deposit with CBK.
It's actually called minimal deposit.
Yeah.
How different is it?
Capital stock is generally what you have running in your account.
So in short, the goal of that,
even
the objective
as you start
of having
lending,
it,
you should have a certain amount. You know what I'm saying? There should be a certain amount in your account.
It's kind of a minimum amount.
Absolutely.
For what?
This is the case.
What business do you have as a regulator to know whether I have money to continue business or not?
And that's the argument, because at the end of the day, these are not deposit taking. But me, I'm saying from an investment point of view, if it's regulated by CBK, and I look at one of the things that CBK checks with digital lenders is the capital stock, then I'd have more confidence. For digital lenders, we're talking about digital lenders. I'd have more confidence simply because of the fact that, let's say CBK wasn't checking. So you'd probably be a digital lenders, but in your accounts, you are probably playing on an overdraft.
Keegan, what do you mean overdraft?
That you don't even have money. You don't even have money in your account.
My understanding of how digital lenders work is they have a capital. They have some money.
Yeah.
they've gotten from whichever investors they have. Then they have people who need that money.
Yeah.
Now they lend to the kawaida mwananchi at those rates. They share the interest.
Yeah.
So if I don't have money in my coffers, I won't have money to give people, and so there won't be business for me. So I die. What business do you have as an investor, as CBK, as a what, as a regulator?
I'm looking at it from an investment point of view. I know you're looking at it from a regulator point of view.
Okay. Look at it. Okay, my investors or the guys now channeling funds into my coffers so that I can give it to people at a higher rate than share the profits with them.
Look at it.
What does it matter to them if I have
look at it this way, Easter. You're going to invest in a business. It's not digital lenders or anything, just a business. Okay. And when you look at that business, you see that so I'm looking at their cash flow the way it is, and I'm looking at they even have some reserve cash.
You realize that is due diligence.
You'd have it's due diligence. So you see this company, yes, they even have some cash reserves. You know, we're in a pandemic, what might happen. So it's a bit stable. So that gives you confidence to even invest in that business.
How important would cash reserves be for you as an investor? You who's looking to invest in Tala as an investor, right? You're BlackRock.
But then when it comes to Tala, it's not.
What does it?
It's not cash reserve because that's sort of like their inventory, because that's their core business. This is a huge argument. We'd love to know what our viewers think about this, about the capital stock.
To say about that.
Please, you guys know on Twitter, Kenya's Market Map _KE, LinkedIn Kenya's Market Map. We also have a contact section on our website, kenyasmarketmap.com. Please put in your feedback. Tell us what you think about this. Easter, your closing remarks on this.
I think it's important that these guys are regulated. I still don't agree that the CBK should have any business checking the capital requirements or whatever. That one, whichever it is, whichever name they gave it. They have no business with that. But the regulation is called for because I don't want people calling me to pay other people's debts.
But then
I want people's data to be respected. We have a data commissioner.
The Office of Data Commissioner.
Yeah, she should be doing her job. This gives her now the mandate to get into that.
Absolutely.
Yeah, I think.
Because it's been a difficult space simply because it's unregulated. But now, Immaculate Kasait, that's the commissioner. It will be now easier for her, to get to these digital lenders who are selling to third party the data of Kenyans, without their consent, which is outrightly illegal. So it would be easier, because communicate with CBK revokes their licenses. So I think it's better times.
Another thing I like is
but the
office
of sorry, just to mention this, the office of the Data Commissioner came into law in 2019. I think it was set up in 2020 towards the close of the year. So they're still getting themselves on their feet. So what does
we're
still early stages. So
they might not have
still a lot of development.
What does that speak to it? They don't have the capacity. They might have the capacity.
They have the capacity, but it just speaks to the fact that the journey has just begun when it comes to data, privacy rights.
If I digress a bit, did the government just come with it? Following the Huduma number thing,
I'm not sure.
Or was it something that was in the
Huduma number? But I think there were calls from the private sector and the civil society alike that the rights of Kenyans, when it comes to data, privacy, and the likes, it was a wild area, and now the office of the Data Commissioner, which was set up there's an act in the Constitution, so that will come and streamline issues.
Okay.
You were telling me about. DLAC.
So what's comforting, or what I like, is the fact that DLAC itself is pro regulation.
Absolutely.
They're like we want to act in the best.
Let's work together.
Let's work together. And it's only a few players in the digital lending space who have been who've been denting the image of all the.
Absolutely. Kevin Mutiso has said that times the number.
Yeah, exactly. So it's welcome. You asked me about my sentiments about that. It's welcome. It's a good thing.
Excellent.